Hello, everyone, and welcome. Please bear with us for just a moment while we make sure all of our attendees get into the session. All right, I think we are there. Well, welcome to this third and final session of our QuickBooks Simplified series. I am your moderator, Jenny Alton from the New York Small Business Development Center Central Office. And your presenter today is the fabulous Christy Dudgeon, who is the president of SBC Consulting. And Christy, we've done 5 webinars now together, and they've all been fantastic. So thank you again for your expertise and teaching ability. We've really, really appreciated that here at the NYSBDC.
Thank you.
And speaking of the NYSBDC, we are a U.S. Small Business Administration resource partner with regional centers at higher education institutions and outreach offices at other locations across New York State. Our free advising, education, research, and advocacy services are made possible by funding from the SBA, New York State, and our host campuses. Now I want to go over just a little bit of housekeeping. Attendees are muted, excuse me, and will not be on camera today. We have a page on our website for the recordings of this series and the resources. I will drop that in the chat in just a few moments, and we'll also share that in a follow-up email. So you have access to all of the goodness from this series and can go back and review and access those resources as you need to. So closed captioning is enabled for this session if you would like to use that feature. If you have any questions during the presentation, please don't hesitate to drop them in the chat or the Q&A box as they come up. You can open those from the buttons at the bottom of your Zoom window. Chat will just be visible to me and Christy. Q&A is visible to our attendee group. And Christy will be addressing questions throughout the presentation. So we will keep track of those and try to get them all answered by the end of the webinar today. That is all of my housekeeping. And I do want to mention, I'll put information into the chat for people who may be in the SEAP program, so we can get those verifications done for you. With that, I will now turn the time over to Christy.
Thank you, Jenny. I appreciate it. And thank you everyone who has attended. I know this is a ton of information, right? It is drinking from the fire hose most of the time. But obviously with these recordings, you can go back and you can check any of these items that we have discussed. So today's session is going to move from what we called, or what I like to call, reactive accounting, which is, as QuickBooks calls it, the quickest, fastest way to get to your financial reports. And so, and in the last class, we talked about how do we connect our bank accounts once we've got our chart of accounts all set up. Then we do the process of categorizing, then we reconcile our accounts, and then we can see our financial reports. However, that is only a teeny tiny part of what QuickBooks can do for us and how we can utilize the system. Now, this is where we get into the what does my business really need? How is it that I really need to use the system? And there are some businesses that they only need to use exactly what I presented in the last class, right? And that's that reactive side of things. However, you will get to the point once you've learned the reactive side to more of a proactive stance in how you start to manage the transactions that are happening within your business. Or certainly if you have someone on your staff that starts to manage this, or you have an outside bookkeeper or someone of that nature, right? And so there's multiple ways that you can approach this. So if you do any kind of invoicing, if you're entering bills, if you need visibility to cash flow, you are going to need to take a more proactive stance. And so we see a lot of businesses really end up falling somewhere in the middle, right? So we'll do some things on a reactive standpoint. We'll incorporate some of these proactive items into there. However, there are also businesses that only approach it from the proactive standpoint, and that is a level of control. We want to know what's going in to the system. The moment that we are making the decision in order to spend that money, as soon as we've created that invoice, as soon as we've received that bill. So we're going to go through what those workflows look like today. But there are two things that I want to do before we jump into what that looks like. And that was a question that we had at the very end about how do we add receipts. And I had mentioned there was a couple different ways that we could do that in the system. There is a how do I do it after the fact, right? That's that reactive standpoint. And then also I want to talk about what the proactive side of that looks like as well. So I'm going to go ahead and share my screen, and I am already in bank transactions. So I'm going to show you this first, and then we're going to jump into remaining questions that anybody might have had from the last class. So let's do this first just so you can see it. So I am in the bank transactions. So I've already gone to accounting. I've already gone into my bank transactions, and I've clicked in this line and I've just opened it up. So in order to attach a receipt to a transaction that's already come through, this is the step that you would do is you would go into and you would find that actual transaction. And then you would open it up just by clicking on the line. And so once I've clicked on the line, I can see that I have this option over here for upload. And so once I click that, then that's going to open it up and give me the opportunity to attach a file. Now, this is, in my opinion, kind of a manual process. It's kind of annoying also. I would have had to either scan in my receipt or taken a picture of the receipt, right? And then I would have to go to my computer. Maybe I've sent it from my phone to my computer, whatever it is that you do, right? And then would attach it to that transaction. And once it's on this transaction, then it's always going to be there. And so we've got that image, which is great. However, what I would consider the more proactive side, and the one that I would definitely recommend that you take, is to utilize the QuickBooks app on your phone or an iPad or something of that nature, so it's more mobile, right? And we're taking that manual process part of it out of there, and we're starting to automate it. And what I mean by that is that unfortunately I don't have beautiful slides of the app because of course I'm on my computer, not my phone. But there is a spot where you go directly into expenses. And as soon as you click that expense to create that expense or add that expense, which is very similar to something we're going to talk about today, what it looks like on the desktop. So we're going to create this expense on the front end, and we'll go through this workflow a lot more. But when we click expense on the app as well as we click it on the desktop, we have the ability to go ahead and enter the information that we see there. You'll see that it's asking me, do I want to select a file or do I want to snap a photo? And so I can do that directly from here as well. And it will then determine that information off the receipt. So I'm not necessarily entering it, and then I can save and close. So that's definitely the way that I would recommend that you do it. You're not going to have to take a photo with your phone and then add it inside the app. You're actually going to take the photo in the app. So hopefully that answers those remaining questions that we had about receipts. Once you have taken a photo in the app and it then is going to feed into the system, you're going to find it here under receipts. And everything is going to be in a line very similar to bank transactions. So two things can happen in here though. We have for review and we have reviewed. And the difference between these are in the app, when you snap that picture of it and enter it, it will ask you if you want to go ahead and accept it. And when you say that, it automatically will move to reviewed. So you won't see it in here under the for review. However, if you don't go ahead and accept it, so if you've got some kind of approval process that you want internally, it just depends on the layers of your company, right? If you have someone in the field that might be taking pictures of receipts in the app and they're coming in here, but someone needs to review that, right, before they're going to accept it and put it into the system, then you definitely don't want them to have that ability or to go ahead and review that. You want to be able to do that from here. Once this is in here, then the change is that's going to happen once it's been reviewed and it's been accepted is that you will then see it as a connection as far as a match. So you wouldn't want to accept it or post it directly out of bank transactions unless you see that match. And so this is where I said that clash of proactive versus reactive starts to happen, because we want to make sure that we are matching things then, as opposed to just posting things directly out of the bank feed. So it becomes a different management, and it really is what your financial system looks like. I'm going to stop sharing this for a moment, and I'm going to go ahead and open it up to whatever questions that are remaining from a you tried categorizing, you still weren't sure what some of that was. I know we had some lingering questions there. You reconciled, you pulled reports. So if you guys had any questions remaining from class 2, please go ahead and drop those in the Q&A or the chat, and we can go ahead and answer those before I move on.
So we do have a question already in the Q&A box. This
Okay.
person wants to know if they've paid someone through Zelle and got an invoice through Zelle, how would they handle that in QuickBooks?
Okay, so we are going to talk about that workflow today. As far as you have invoiced or you've received a bill, it looks like, and you've paid the bill. So you've received an invoice from someone. So that terminology, the way that I just said that, is pretty important. And we want to make sure that we invoice someone that's going to pay us. And that's why you'll receive an actual bill from someone that says invoice at the top, right? Because that's their process. But we can enter that bill in our system, so that that clock starts ticking. However, if we paid it instantaneously through Zelle and we didn't actually set that clock so it's not due at a later date, then we're probably not going to put it actually in the system as a bill. We are just going to call it whatever expense it was when we see that transaction come through Zelle, or we're going to enter it proactively as an expense, also something that we'll go over today. We also have a question: what category should I use for credit card payments when I'm posting them? So we're actually not going to categorize a credit card payment, if you remember that correctly. The credit card payment is going to go directly to that liability. So even though we call that categorizing, there is an important button that we want to select maybe in the options. So let me actually switch back over to that screen to show you, because I was actually on a credit card payment when I was talking about the receipt. And you'll notice that I have this option here, and I'm categorizing this payment. I'm not actually matching it. But my transaction type here, see my transaction type being a credit card credit, not a transfer. I could also choose credit card payment, right? And then the category or the account that I want to use, which it's interesting that it's not actually putting it on there. Let's see if it gives me this option, is my actual credit card account. So it doesn't get a category such as an expense or something like that. So I'm going to choose that blue business credit for the account that I'm actually going to credit that to. So that's how we handle credit card payments. All right, next question. Could you go over income categories? If I make a sale at a show, how does that income get categorized? How about wholesale payments? So some businesses only use one income category, so they may just have one that's called sales. QuickBooks typically will give you sales by sales of product. They'll give you service. I think we went over, there was like 7 or 9 of them that were in the basic chart of accounts. So if you have retail versus wholesale, it sounds like, Jen, then you probably want 2 distinct income categories set up in your chart of accounts. So you probably want retail sales and wholesale sales. And so when you have that actual sale, you would choose the appropriate category for that sales so that you can see the differentiation. I typically don't recommend that you have a ton of different income categories, but if they are so distinctly different, such as wholesale and retail, it is good to have visibility to that. When I buy something, if I no longer need it, so to make a return, how do I categorize the record, the money that you returned it? So if you bought something, which means you originally created an expense in QuickBooks for that amount, and then you returned it, you would want to categorize it back to that expense account. So basically you had the expense, so the expense amount went up, right? And then when we returned it, the expense amount goes back down. How should you add depreciation of equipment? Where should I put it, and what would be the category? So if you do have fixed assets, such as equipment, and you need a depreciation account, then in your chart of accounts under expenses, so that would be the account type, you do want to add a depreciation expense account. There are an additional account that you typically will also put under your fixed assets called accumulated depreciation. And so each year or each month, however it is your accountant gives you that information based on what those depreciation amounts are, you are going to put that into accumulated depreciation and then offset it with the depreciation expense. So that's actually how that expense gets over to your profit and loss. That generally looks like a journal entry when you do that. So you're reducing the amount of the fixed asset through that accumulated depreciation account. So that has to go down in that depreciation, right? And then the expense is what actually shows up on your profit and loss so that you have that for your tax return. I'm an artist. I receive payments such as fellowships. Sometimes the funds cover materials, but sometimes they're unrestricted. What's the best way to categorize these? Okay, so you have to keep track, obviously, of in-kind type donation. I don't know if, Rachel, if you're a nonprofit or for-profit, so there's different terminology between the two if you're for-profit or nonprofit. But you have to keep track of the value of what those donations or funds might look like. So you would want to have an account. Sometimes they're unrestricted, you said, so you would have an unrestricted and then you would also have a restricted. So that way you could keep track of the value of what each of those are. So you would have those very specific accounts listed in your chart of accounts then. Um, Jenny, that question from Susan looks like it's for you. What if some of my income is liability, purchase of a group class not yet used? How do I categorize that? So you said it perfectly. So this is if you've received the money for something and you have yet delivered on that, it is considered a liability until you actually deliver on the service. So you would have an account in your chart of accounts that is basically prepaids, or deposits, maybe might be what it's called, whatever it is that you call it. And you're actually going to have it in as a liability account. And then once you actually deliver on that service, then you can have that exchange of the money from liability over to the income. So you will call it as income. And Rachel, yep, you're for profit. So the terminology that you're using, unrestricted, restricted, that's often like a nonprofit terminology, but you definitely could have those two accounts in your chart of accounts, specifically even for profit, just so that you know where those in-kind donations or donations for materials are coming from. How do I record credit card payment that I used to pay for a client's fees, which is the client that reimbursed me for? So you paid by credit card a client's fees, it looks like, and then they reimbursed you. So the actual payment from the credit card is going to be you can call it a billable expense for the client. And then when you then bill the client for it, basically that is an account that cancels itself back out. So that would be a very specific account then in your chart of accounts that you would need to create in order to have that billable expense income. The chart of accounts, the standard chart of accounts that QuickBooks sets up for you already has that in there generally. It is one of them that I usually say to inactivate because not everybody deals with billable expenses, right? But if you have that, then certainly you would want to first call it the expense and then do the billable expense income part. Negative AR occurs when it's not a credit to a customer, and how to zero this out. So negative AR can occur when you have said something was an accounts receivable. So that is a category that you can choose when you're categorizing something. And it is the appropriate category to choose if you've invoiced someone. However, if someone is overpaid, obviously that can go into a negative AR, as well as if maybe you didn't have the invoice there, but then you said it was accounts receivable. So payments can be received in multiple different ways, and we just have to make sure that we're categorizing those correctly. If we do have sales, so I know we had a sales question earlier, one of those ways, and we are going to go over that today as we talk about the workflows. if we invoice someone, it's the sale of whatever it is that we're selling. So whatever category, we're actually going to choose that on the invoice on the front end. However, if we receive a payment into our bank transactions, we need to make sure that we don't actually call that the income because we're going to duplicate it. And it will be one of your little quiz questions that we're going to go through as we go through a lot of these things that we're doing. So we just need to make sure that we do that correctly. Now, going through AR when you've got incorrect items or inconsistencies in there can be a headache because you literally are batching up all the payments to all the invoices and you're looking for whatever invoice might be open or whatever client you have those credits in there. So it is definitely a higher level task than we're going to cover much today, but at least we're going to go over the workflow so that you can get started using it correctly and hopefully not have those discrepancies. All right.
Christy, there
Yes.
is one question in the chat as well.
Okay.
So this person is a consultant
Okay.
and has incurred some expenses
Yep.
and then will get paid and,
Yep.
reimbursed at that
Yes.
point. So how would they handle that situation?
Yes, and let me show you my screen again over here because this is the easiest way to enter those expenses when we have them. And I would go directly to the chart of accounts. So the question, if everybody could see it or not, is that you have all these expenses, right, that are happening on the personal side. And how do we enter those in QuickBooks? So we talked about this, I think, in the very first class. And what would we do when it is a personal expense that is not a personal expense, right? We just happen to use personal funds. So the appropriate way to handle that is to call that an owner's investment. So that's where the funding or the money is actually coming from. And so I would enter this based on just clicking view register. And when you click this register, I think we did one right here. It looks like this little drop down here that says add journal entry. I would click that and I would choose journal entry. Now you are in the register for the investment. So this is the one side of a journal entry, and journal entries we could spend multiple classes on how to set those up and what those are. Make sure you choose the appropriate date and then you can choose the account for what that expense actually was. So a lot of times this is office supplies or office expenses. So if I choose office expenses and I spent $200 on my office expenses on my personal account or my personal credit card, then I can add it by increasing because I'm increasing the value of my owner's investment and I save it. And when I save it, what that does is it's entering that into not only owner's investment, so it's increased that, but if I were to go over and look at my reports for my expenses for office expense, then I would see that $200 expense there as well. So definitely at the end of the month, when we talk about month end close, which will be at the end of today's session, this is one of those things that everybody will want to do is to make sure that you're running through your personal statements, either your checking account or your credit card, if you periodically are using one of those accounts to purchase business items. Then you would want to go through that, make sure you add up what each of those categories might be, and then go in and make sure that you do those entries in order to ensure that all the business expenses are there, as well as the investments that you made in the company. I have one more question in Q&A. It says, I deleted payroll expenses of wages because I have no employees. I will be the only employee with my business to get it started. Would I use payroll expenses? No, but maybe, depending on the type of business structure that you are. So if you're a sole proprietor, LLC, or partnership, right? So one of those three, then often you are going to pay yourself through owner's pay in personal, owner's draw. So you're not actually a W-2 employee of the business. The reason I say it matters the business structure. So you'll see owner's draw is here. So anytime that you pay yourself, then you would be using this and you're considered to be equity, not an expense to the company. If you are a C Corp or an S Corp, there are different rules. In fact, you're required to take some sort of W-2 salary. personally for those businesses. So therefore, those payroll expenses would come into play. And often they have two different categories. They'll actually have owner payroll expense as well as payroll employee expenses. And there's multiple reasons for doing that, but one of them is because an owner generally is not considered to be an actual expense to the business. It's always an equity type thing. And this is a accountant question if you need more kind of details on why it is that you do that. But it does affect evaluation of your company if you're planning to exit. So anytime I see any kind of payroll in there and someone says I'm the only person in my business, they're generally in the wrong spot unless they consider themselves to be a W-2 employee. We are going to have to move on here for a second, just to make sure we get everything covered today. But I want to grab these last two. So how do I record a personal use of a business credit card if I used it by mistake? So it's exactly the reverse of what I just talked about with the investment. Instead, we're going to use the owner's draw. So I could view this register for owner's draw. I could do the same journal entry, but you'll notice in this one, owner's draws are always decreasing. Owner's investments are always increasing. So with this, I will just say where it was coming from. So it's probably going to be out of my, remember, it doesn't matter what you did with it. The business doesn't care. The category that I'm choosing though, for this one is what the account it actually came out of. So the only account I have on here happens to be the business credit card. And I'm going to go ahead and decrease it by however much that personal expense was that I accidentally used my business credit card for. And so I'm just going to hit save and that's going to be recorded in there. And that's how I take care of that. If I want to put a memo in there to remind myself what that was for, that's okay. I always say less is more though when we're paying ourselves with our business money, right? Um, let's see, I think we've got everything. Uploading these paid personally, we would categorize them under owner's investment. So yes, the receipts, you would still keep those all under owner's investment if you paid for those personally or with your personal funds. That's when you would use owner's investment. Obviously, if you are business expenses and business accounts, that's the place you want to get to. So as soon as you can get yourself a business account, even if you aren't making any money, you can still transfer personal money into a business account and then utilize it. Anytime you transfer your personal funds into a business account, you would still do that exact same thing where you would call that an owner's investment for that infusion of money. And then you would move the money or you would say where it's going once it's in there. How to correct an entry that you spotted on report. Open up the line. I usually click the value. So if you click the value on the report, it will open up the transaction itself. And then you can find the word category or account on that and you can change it. You'll see a little bit more about what that proactive side looks like and what it will look like when we open it up as we start to move through this proactive side of things. So we're going to switch over. Definitely, you can put more questions in there as we go along, but I'm going to kind of ignore it for a little bit. Not that I'm ignoring you. It's just I need to move into this next stuff. And then we will I will be taking breaks periodically. I'm going to be asking you a lot of questions today that you guys are actually going to be answering in either the chat or the Q&A. We probably want to actually keep the questions that you're asking me about something specifically, if you could put those in the Q&A. If I am asking you a question based off of a slide, if you could put that in the chat, that way we can keep the questions that I need to go back and ask in the Q&A. We'll keep them in that same spot that way. Otherwise, we're going to see a lot of people answering A, B, C, D, because that's what the questions are going to look like there in the chat. So if we could try to do that in the future, and I will mention that as well as we go along. So we talked about the class 2 questions. I am going to briefly touch on the QuickBooks help options. There are a couple ways to navigate help if we get into trouble when we are in QuickBooks. And then we're going to hit those workflows that are extremely important from that proactive side. So we're going to talk about the money in workflow, the money out workflow, and then what a month-end close means. A month-end close could be this daunting thing, and it really can be this huge process. It also could be super simple. So it depends on the type of business that you are running, what you actually need to to cover within a month-end close. So if we need help, we run into a wall in QuickBooks, we have no idea what's going on, there's two things that we need to ask ourselves. And first of all, we need to define, is this a software issue? Or is it a bookkeeping issue, user, or data issue? So we have a lot of user errors right in the very beginning because we don't necessarily know what we're doing. We're not all bookkeepers and we all just became one overnight as soon as we learned all of this stuff, right? Or is it a true software issue? You know, you push a button, it doesn't take you where it's supposed to go. You know you entered the info, however, the system glitches, right? Jenny and I were actually talking just before we let everybody into the session that with all the changes that are happening with QuickBooks over the last year, so the interface changes, the AI integrations, they have been releasing a ton of new updates, and with those and not fully beta testing, I guess you could say, there happens to be a lot of glitches that are occurring. And if you are running into one of those problems, then it is a software issue. You do want to contact QuickBooks. If you have a problem with your user, password, those types of things, roles that you're not sure how to change with someone, that is a QuickBooks question. Everything else in this orange box is a Google YouTube question, typically, or there is a spot within QuickBooks to ask that before you actually pick up the phone and call the software company. And this is the point that I want to make. QuickBooks is a software company. They will help you with bookkeeping for a fee, right? And if you need that help, certainly they are there for that. There is also a network of people called pro advisors. These are people that do not work for QuickBooks. However, they are certified. I happen to be one of them, right? There's a ton of this, thousands of us across the country. If you connect into the expert part and find a pro advisor, they generally will find you by geographic area. So you're going to put in your zip code or something like that in order to find someone who might be a pro advisor near you. Obviously, these are people who own businesses. You would be paying them as well. But if you need an accountant or you need a bookkeeper or someone and you want them to be local, this is definitely a way to find someone who knows the system and can help you that way. You can read their reviews, you can read what they're all about, you can read their specialties. The pro advisors all have kind of a little profile on QuickBooks. So if you didn't know that existed. But I do mention YouTube, I do mention Google because you could spend hours on the phone with QuickBooks folks. They might reroute you to someone else, and at the end of all of that, you might not get the answer you were actually looking for. And part of this is knowing the questions to ask to get to the fastest way. Ironically, I have a lot of clients that will call either myself or someone on my team, and they'll say, can you call QuickBooks with me, right? And this is something that we do because generally we can get to the solution that you're looking for a lot faster. Or we can say, oh my gosh, don't call QuickBooks, do this, or this is what this is. So just be aware of the type of help that you're looking for before you kind of go down that rabbit hole with QuickBooks. There is this new assistant in there, right? You can ask it questions. It's AI involved. It will get you some of that information that you're looking for. You also, YouTube videos, so many YouTube videos. So Jenny probably sent you a follow-up where I sent the link to the YouTube library that is QuickBooks specifically. So those are the videos that the QuickBooks team has put together. They have new videos coming out every day because, of course, they had to redo their entire library. All of the old steps were the old interface, and now all the new steps are out there. There's also tons of accountants and bookkeepers that have videos out there of step-by-step what to do. So YouTube is a wealth of information. So if you're trying to figure out how to do something or why something isn't working, you can certainly go that well. There is a community page out there as well that lots of accountants chat back and forth and answer questions that often if you're trying to figure out how to do something, you can go that route as well. Trust me, it's often a time saver to go seek that information on YouTube or Google as opposed to calling QuickBooks and then ultimately not getting the question that you wanted. And that's generally because it's a bookkeeping question or how do I do something specifically for my business as opposed to I have a software glitch problem that's happening. So there is that written help center, a forum, call tech, Google your question. It's likely somebody has already asked it. Very rarely do I get to the point where I'm like, oh, you just can't do that? There are a couple things in QuickBooks Online, even though we're trying to force it to do some of the things that we want to. That sometimes you just can't quite get it to do exactly what you want to do. But otherwise, you'll probably get that answer once you go into those community forums. Start with the Help Center. The assistant will provide those common answers, right? Written help articles. Contact leads you back to the chat. It is difficult to get a call to them indirectly. And then I usually say recommend a call back because you could sit on hold for a long time. They will call you generally much faster than they actually say. So they may say it'll be 5 minutes. It might be 2. So don't leave your phone. Make sure whatever phone it is that you get that call back on that's associated with your account is a real phone also. That's very important. I had a client that they were redoing their office phones and their office phones were down. However, their office phone was actually their callback number phone. And they'd had a true software issue and they couldn't get through to QuickBooks. So just confirm that that phone is yours. It's not your spouse's. It's not somebody else's in the company, right? And that you're able to actually get that call back from them when you're getting that support. Here is the YouTube channel. If you go to YouTube and you just type at QuickBooks, you'll find it. That's how QuickBooks works. All right, so we're going to talk about something really boring, but something really important. There are a lot of slides here. I'm going to jump through them really quick, but you will have access to these slides right after. So if you do need to set up sales tax, which most of us do, right? It depends on your type of business, though. This is if you're not sure if you need to charge tax for someone, certainly ask your accountant. They will provide you that guidance. Every state is different, right? And so it's important that you ask an expert about this one. The last thing that you want is for the state of New York to send you a nice little letter that says you owe us sales tax and you never collected it, right? So that's coming right out of your bottom line. You should set up sales tax if you have to collect it. This meaning if you are doing invoicing and you are actually using QuickBooks to charge sales tax and then collect it. The reason I say that is if you have a separate POS system that you're utilizing, often the sales tax collection and use is happening there. If you're using both a POS system and invoicing, then definitely you want to make sure that your sales tax is set up in QuickBooks. You want to do this first before you ever invoice someone. So that's why I hit this from the very beginning. If we are invoicing sales tax POS entries, the reason I say POS, you're going to see kind of a fine dance between the two of those, and it's depending on how that information is coming in. We might just need to have the account set up so that we have that liability in there. However, the tracking is going to look a lot different. This is a step-by-step setup that's going to help you ensure that any product or service that I'm going to show you how to set up, you can mark them as taxable or non-taxable. Some businesses do both, right? We have taxable services and non-taxable services. We have taxable products, non-taxable. In the landscaping world that I was in, it depended on the type of work that the crews were doing. Some of the things they did were taxable. Some of the things they did were non-taxable. In the middle of snow removal, there are some things involved with snow removal that are taxable, and there are some things that are non-taxable. So having your system set up correctly for that, for when you invoice the clients, is extremely important because if there's someone that's going to call you out for charging them sales tax when they shouldn't, it might be your client, and that's never a good place for them to be the one that's telling you, hey, you're illegally charging me and you shouldn't be. So we definitely don't want to charge more than we should. When we set them up, what may be needed is to know whether we sell taxable products or we provide those taxable services, if we're retail POS or an online store, right, and how those function in the sales tax collection. Also, we need to collect that sales tax from our customers, and then do we need to file those sales tax with the state? So we kind of need to know those answers, obviously, as we go into here. There is a sales tax setup section, and I am going to jump off these slides and go over there just so that you can see it. But one thing to remember about sales tax as we go through this setup in the end is that when we make sales tax payments, then we want to make sure that we're not capturing those as they come in through the bank transactions, because there is this section where we will have to mark things that got paid. It's also how we can any kind of discount that we might receive from paying our sales tax on time, right? Sometimes we receive a little discount. We do need to make sure that we're entering that in there, and there is a spot in which that we will do that. So the first thing is that we have to set up the sales tax, which means we have to say what state we're collecting the sales tax, what that percentage is. In the state of Ohio, my gosh, it matters if I cross the street or not, depending on what sales tax rate I charge. It is not statewide. There are some states, right, that is statewide, so it's very state dependent. I have to be very specific, especially if people are working in one city versus another, what sales tax. So you could have a huge sales tax setup, or you could have a very minimal sales tax setup. Also, if you're crossing state lines, this is why it's important. You might have multiple states there, right? Or if we run an e-commerce business, we need to know the threshold of the neighboring state, and if we need to collect for that state as well. So lots of things that could be involved with sales tax as we go into this setup. But the business's correct physical location is extremely important to have in here, because they're going to use that information to set up those tax rates initially, right? So if we're selling directly from our location, or we have an e-commerce business that's based out of that location, that generally is going to be significant from a sales tax standpoint. But then again, there could be a lot of factors that come into play, as I mentioned. If we have people that are providing that service in other areas, that we might have to charge the sales tax there, not necessarily in our business location. So we're going to choose our state sales tax agency. We're going to then confirm how we file these taxes. So every state is different, right? And also it may be dependent on the volume of sales tax that we have to collect. So we might be a monthly filer, a quarterly filer, or an annually, and we need to make sure we say that correctly, because that's how we're going to get notified by QuickBooks, as well as be able to pay, and also how the reports are going to get set up in sales tax. And then the date that we're going to start collecting sales tax. So that tracker is going to go ahead and kick in. And we want to review those. So anytime there's a change, or if ever this report looks wrong, or maybe our filing isn't coming up correct, we need to go back in and change those settings and fix it. It's not one of those things, oh, it's always wrong, so I don't use it. It's like, no. You need to fix the setting, and then it would be correct. So this is a financial system. We can't just have it be somewhat right or somewhat wrong, right? That would affect a lot of money, as well as our reporting being accurate. So there are questions here that we may want to ask ourselves: where the business sells, right? Are the sales in person, online, both? Is shipping taxable? Sometimes it is, sometimes it isn't. What our products and services are tax registration details. We're going to need all of that there. And then once we've got this set up in the system under sales tax, and again, like I said, I'm going to show you this real quick, then we need to start adding products and services, and we need to mark whether those are taxable or not taxable. And we are going to actually set up products and services when we talk about the workflow. And then our sales and customers, we can also mark whether a particular customer is taxable or non-taxable. So if we have customers that are tax exempt, a lot of government agencies, right, we're not charging them tax. We also have customers that might be reselling products, right, so they may be tax exempt. We're certainly going to want their tax exemption forms on file, but we can mark that in the system. So then no matter if a product or service is taxable, if they're a tax exempt client, then they would not be getting charged tax when we create an invoice for them. So it's not something we have to go back and manually do. It's an automated type thing. And then we definitely want to test. So we want to make sure that this is working correctly. The percentage that's coming up is correctly. The sales tax that's being figured is correct. And as I mentioned before, if something is not correct, it's going back in there and updating those settings to make sure that they're correct. There is a report that is in here that is specific for sales tax. You can go into the sales tax center in order to find that report, or you can pull it through your report. And you'll know what the tax that you've collected, what the tax owed, the filing period, the due date. This will all be on there. We want to make sure that's correct. And that's also the section that we talk about here, where we're going to record the actual payment when we go and we pay sales tax. The rule for this sales tax is never income. And so there's a lot of cash flow problems in small businesses when we might look at our bank account and think that money is money that can be spent or used, right? And sales tax can create a lot of issues with this. I do recommend maybe setting up a second business checking account. They're generally free, especially for small businesses, so that you can put sales tax or something like that, or even payroll taxes, right, into that separate account so you don't make the mistake of thinking you have money or overspending money. I see this a lot. That's why I mention it. Sales tax might also actually be withheld and paid then from a POS or an e-commerce. So it's also important to know whether or not that sales tax is actually flowing through to you, or it's staying within a different system and it's being paid directly out of there. Product setup does matter, right? So incorrect product or service tax settings can cause those incorrect tax calculations. So we want to make sure we set those up, and I'll show you how to set up a product or service. Exempt customers need documentation. There is a spot, I'll show it when we go in there, to our customers where you can upload those exemption certificates, so that way you have the proper paperwork on file in case you ever get asked for it, as well as where that box is that you can check that they're tax exempt. And then POS system needs an extra review. So I mentioned POS systems, but also when we talked about money coming in to our bank transactions, we talked about this in the last class. I think I hit it on the first class as well. POS systems lump in generally a deposit, and sales tax can be part of that deposit. And it's important that we split those out and we accurately account for what is truly income, what is truly sales tax, and we get those into the correct accounts. There is a default account in your chart of accounts when it comes to sales tax that's going to say sales tax payable. As soon as you set up a new sales tax account, it will create a new account in your chart of accounts. So if I am paying the state of New York and the state of Pennsylvania and the state of Maine, whatever it may be, right, anywhere that I'm doing business, I'm actually going to get separate chart of accounts listed in my chart of accounts based on where those payables are coming from. And that's the system doing the automation, because when you invoice someone for the state of New York, then it's automatically going to put that a value of what the sales tax being collected or invoiced for, they're going to actually put that into that liability account. And then when you pay that sales tax to the state of New York, you are going to pay against that liability account. So very much like what I was talking about with a credit card. So you're going to see that liability go up, and then you're going to see that liability go down. And that's why it is very important that we want to make sure that we're using that sales tax record payment as opposed to just capturing them when they're coming into bank transactions. So common mistake is sales tax gets called an expense. It's not an expense. We just are holding that money on behalf of, the state that we're collecting it for, and then we're paying it out to them. So we never call it income, and we never call it an expense. That liability account actually ends up being a clearing account, and we do want to keep an eye on it to make sure that it's accurate. So I've seen liability accounts be very large because the payment was not actually recorded against it. And I've also actually seen them be very low in the negative, and that's because maybe those payments were recorded against it, but the actual collection or the withholding of the sales tax never actually hit that liability account. All right, I'm going to switch my screen for a second, and we're going to go over to QuickBooks then, and we're going to talk sales tax. It's probably my least favorite subject, right? Anytime we go into taxes, but it is extremely important. We want to make sure that we're doing this correct. It is one of those things that you can get yourself into a lot of trouble with, especially in the beginning of small business. So you want to make sure that you have that information correct. All right, so on the left-hand side here, you can see that we actually have a sales tax section. And when I click that, I'm just going to go ahead and click the overview. And it's going to give me, I'm at the beginning, sales tax at a glance. I haven't set anything up. See your financial info by turning off privacy. I don't know how to turn off privacy. Let's see if it does it. Maybe you can see it now, hopefully, since I did the little eye. So, this is where I'm going to turn on sales tax though, right? Because it's never been turned on. So it keeps giving me these boxes to turn on sales tax. So if I click that button to turn on sales tax, it's saying, make sure I have the accurate business address and the sales tax agencies where I file. This is my fake address, which it's automatically picking up and you can see all these different Ohio sales taxes I was talking about. It's based on municipality, but this generic address, it's picking that one. This is where I choose my filing frequency. So generally in Ohio, we are monthly or quarterly. Have I registered for sales tax with any other agency? So this is if I have multiple states that I have to register with. I'm going to say no because I'm just in one state. If this is correct, they're going to set that up for me, and I'm just going to say finish. And now I will see how much I owe, when to file, and my sales across the state. So at this point, all I've done was turn on the sales tax part of it. And I only have one location in there based off of where my address is. Depending on how I utilize invoices in the future, that is what's going to drive the location, and we'll see some things happen on those invoices when we change things. But I'll see things that are ready to file, my unpaid sales tax returns. I'll see the sales tax that's accruing, so I'll know the amount that I have collected. I've got my registered tax agency down here, and I've got things categorized or uncategorized. So I've got an uncategorized product or service, which means there is a product or service already set up in the system. There's generally some generic ones in there, and that means that I haven't said whether it's taxable or non-taxable yet. So I need to go in and fix that. Sales tax returns, I can click that and I can see the lineup of my sales tax returns here. I'm going to close that. And this is going to tell me that it's open. If it's overdue, it's going to tell me that it's overdue. I'm going to get this red flag. I see a lot of systems where I have this in here a lot because you physically have to come in here and say that something is paid. Otherwise, it's going to assume you didn't pay it. Even if you did pay it, even if you put it against the liability, it's still going to be in there. But I can see my summary, which right now there's not really much in there. For this, there's not going to be anything in here. As soon as I add a invoice in here where I might have collected some sales tax, then it's going to show me that. What's important here is that this is where I'm going to add any adjustment or a prepayment that happens. So I could put in a discount that I might have received. And so I choose my reason. I can say it's a credit or discount. Maybe I overpaid the prior month, so I've got that prepayment in here or something. I can add that adjustment date. And really what this is doing is it's helping lower, not helping, it is lowering that liability, or it's adjusting that liability account so it's correct. So this is actually where you want to come in and do that. You'll also see the liability report here, so I can tell what's taxable versus non-taxable when I start to invoice someone and actually can see that information. I talked about sales tax categories, so we've got uncategorized or categorized. So I've got a service in here, so this is one place I can see those products or services that are uncategorized. We'll go into services here in just a minute and we'll look at that as well. If my sales tax settings change or they are wrong, I can come down here to sales tax and I can add them. If you have a custom rate for some reason that you need to put in here, you can do that as well so that you can tell the system to choose that custom sales tax versus the actual one that's coming directly from that sales tax agency. But the system does a lot of automations to this at this point, and so you just need to make sure that the settings are correct, really is where I'm going with that. All right, so that is sales tax in a nutshell. Again, those slides, the step-by-step are included in the slides today, but just making sure that you are connecting with the right people to give you that information so that you can get that set up correctly, or having someone help you set that up. So now let's talk about the money in workflow. So as I mentioned already, products and services are part of the money in workflow. And so this is all on this proactive side. So we look at this little doodle here. This is an old way that the system used to look. It's actually kind of nice because it does actually show you the workflow of what money in looks like. One of the first steps is you're going to want to set up your products and services in the system. If you have something like Square that you're using and the Square items are in there, often then you can integrate Square with QuickBooks, and those products and services will actually flow from Square or from QuickBooks, right? And you want to make sure that that's part of one of those settings if you need visibility to individual products and services that are happening. There also is a lot of work that can be included in that setup or that integration, making sure that gets correct. So a lot of, especially if you are just using Square, you may want to abandon the connection back to QuickBooks, except for that monetary standpoint, because you can get a lot of glitches. I'm just warning you now. Between any of those integrations. The same thing with Shopify. If you are managing those individual items and you want the systems to talk back and forth to each other. So what I'm talking about from a workflow today is specifically if I am using the estimating portion, if I am using the invoicing portion of QuickBooks, then this is the steps that I want to take. If you're a company that does not invoice customers or create estimates, then you do not need to know any of this. This will be part of that system that you don't even use. So you can kind of tune me out for just a couple minutes here. So first step, we're going to add those products and services. We're going to add customers. We can add customers on the fly. We can do those directly from the invoice. I'm going to show you both ways how you get there. We can create estimates. If you don't create estimates for your customers, you just create invoices, that's fine. I'll show you what the estimate looks like, but you don't have to do it. You can go straight to the invoices and then you can receive payments. So this is one way of doing the money in. There is also another item in here called a sales receipt. And so the workflow at the top, which is most common for a service-based type business, is we create an estimate, we convert it to an invoice, we receive a payment, then we create a deposit. So that's the most common service. If we are accepting an immediate payment, so somebody walks into the door, this is also how a POS system works, whether you do the process here. Generally, it creates a sales receipt. And what a sales receipt is the function of an invoice as well as the payment happening simultaneously. And it's going to look a little bit different. It's actually going to have the payment information at the top, and I'll show you that as well. Then there's the workflow integration with a POS system. So what happens here is we have the POS system doing the invoicing or the point of sale with that sales receipt type function. It's syncing into QuickBooks. Then we're reviewing it and then we're matching it back to our deposit. So that's what that workflow looks like, different than this first workflow that I'm going to talk about. And then we've got the journal entry method. Now, remember where I said sometimes there's a lot of glitches and sometimes a lot of problems happen. There are YouTube videos out here on how to do those connections as well as do the journal entry and how to properly set up those journal entries. So you ultimately will choose one of the two at the bottom. I can tell you 9 times out of 10, the bottom one is actually the one that a lot of companies end up choosing just because it's easier to manage. It's less data happening. And this allows us to take that POS report, create a journal entry, match it back to our bank deposits, and we do all these splits and everything turns out to be correct. That generally happens once a month. Sometimes it happens once a week. But as I mentioned before, tons of YouTube videos out there. It depends on the POS system that you're using. I recommend you go find those and choose whichever method is the best for yourself. Products and services. So again, tons of slides to tell you step by step how to do this. That's informational. I'm not going to go through these one by one because I'm actually going to go in and I'm going to create these for us or do some generic ones. So we have to choose the type of product or service that we're doing. So is that going to be a product? Is it going to be a service? Is it inventory? Is it non-inventory? Definitely recommend staying away from inventory at the beginning. If you start marking things inventory, you're going to get an extra account in there. It's going to be crazy. Inventory in itself is a whole entire gamut of information that you need to know. So my recommendation here is stay away from inventory now until you know what you're doing. You cannot change things once you have already made them inventory. You cannot switch them back to non-inventory. So if you do all this work of setting up products and services, you call them all inventory, guess what? You get to do all that work all over again. You can also create these in a spreadsheet and then upload them. So if you're taking them out of another system, or maybe you have a supplier that supplies all of these items. So an example of this, when I was in the landscaping world, we worked with a lot of nurseries that had thousands, tens of thousand plants, right? Trees and shrubs and flowers. We would literally take their spreadsheet, adapt it, import it, and that became all of our products and services. It was a much nicer way than having to go in here and manually do it. So know that you can do this two different ways. And then best practices, keep the names simple and consistent. I always say with products and services, you might want to have someone who creates the naming convention of how you are going to use these, and make sure that it is consistent going forward, right? When I use those supplier products and services list, then they were coming through with their naming convention. We just had a question about you don't have to create an item list. That's exactly what I'm talking about, actually, is products or services is an item list, and that is what we're going to work on creating. So you can create that in a spreadsheet to upload it, or I'm going to show you how to create these individually, one by one, generally at the beginning. The next step that we want to make sure that we do is create a customer. As I mentioned, I'm going to tell you, you can do these on the fly. I'll show you how to do that, as well as how do you create customers individually. Same thing with those products and services, or item list, however, whichever terminology you want to use. You can upload customers in, or import the customer list that you might have from a previous system as well. So there is an import way to do that. We do want to make sure that we have those customers checked if they are tax exempt, right? Or they are receiving taxes. If they're receiving sales tax, or they are just charged sales tax, we don't do anything. It's really if they are tax exempt that we want to make sure we have that correct. Then we can create an invoice. I'll show you how to do that step by step, or not an invoice, I'm sorry, an estimate. An estimate looks exactly like an invoice, looks exactly like an expense, looks exactly like a bill. Everything looks the same in the system once we get in there. However, you will notice at the top, it will tell you which one you're in, just to make sure you are in the right spot. So if you're meaning to create an estimate, not an invoice, and you might have clicked the wrong button, just make sure it says estimate at the top and not invoice. The system is automated at this standpoint if we have email addresses that we can send to someone. And what I mean by that is we can create an estimate. We can send that person an estimate. They can accept it electronically. And when they accept it electronically, it automatically moves it through the system to the next spot in the workflow. And I'll show you what that looks like. You also can manually move it. So if somebody says, yes, I approve it, or whatever, you manually can just update it in the system. And the next step in this would be to convert it to an invoice. Once we convert it to an invoice, it just is taking what that estimate looks like and it's moving it to an invoice, everything that was on it. It does not mean we have to update that estimate first in order for that invoice to be correct. We can update the invoice, we can add things to it, we can change it. So those don't have to be identical to each other. And as I mentioned before, you can just skip that entire estimate if you don't even use estimates, right? It's not necessary that you do that step. We also can send someone an invoice and they can pay directly through a link. We do have to set up QuickBooks payments in order for that to happen. There is a fee associated with it if they accept a credit card or if you accept ACH. So it's simple in the standpoint of the system will recognize the payment happened. It will connect it directly to the invoice. It requires no steps on your part. So there is a time item there. However, if you use a separate merchant account, separate POS system, right, they just won't be able to pay through that automated link. That doesn't mean that you can't accept payments or receive payments and have your clients pay that way. So it's completely up to you how you would choose to do that. And then I already mentioned converting it. We do want to make sure that we are using the receive payment function when someone pays an invoice. And that's because we have to have that payment directly associated to that invoice and mark that invoice as paid. Otherwise, what happens is we still get that income. That income sitting in accounts receivable. So we had a question about accounts receivable earlier. So it looks like we've got this gigantic accounts receivable. We still got the sales there and we've got all these open invoices. And so this is where accounts receivable can kind of go haywire. And I'll show you that step as we walk through there. And then the last step in this, and you probably noticed that my workflow at the beginning, you probably didn't. However, QuickBooks doesn't consider bank deposits to be part of the money in workflow. However, if we are accepting checks or cash, there is a function that we will choose called undeposited funds. It's one of those funds that's required to stay in our chart of accounts. We cannot delete it. And what undeposited funds is that it's a holding account. So if we have multiple checks that we're receiving in the same day or cash, some businesses still operate like that. If it's electronic, it's a little bit different. But if we have those, what we would do is that we would deposit them into what's called undeposited funds, and we hold them there together. Then we create a bank deposit. Last step in the process. And what that bank deposit does is it allows us to choose all those different checks and all that different cash, puts it into a lump sum. And this is important because when it comes through our bank transactions, when it comes on our bank statement, it's not going to be listed as individual checks unless that's how we deposited it. But if we deposit things as one lump sum at the end of the day, we take it to the bank or once a week or whatever that may be, then we need to see it as that grouping. And that's what this bank deposit does. And we'll see that as well. Otherwise, if it's an electronic payment, someone paying by Zelle, right? We had that one earlier. We're going to choose that. And it's obviously those Zelle payments are just being deposited one by one into our bank account. So we're going to choose our bank account to directly deposit that. And then we don't have to do this next step. And I will review this so that it makes a little bit more sense because I'm talking fast. Sales receipt. As I mentioned before, a sales receipt is an invoice and that receipt of the payment together. And if it is, again, receiving checks and cash that we're going to our bank and we're doing this all as a lump sum, we would choose that deposit account to be undeposited funds. Otherwise, if we're depositing those checks one by one, which now with electronic we can do that, one check at a time, that's how it's going to be coming into our bank account, then we would choose that bank account directly. And I'll show you how to change that. So we're going to go through some practice scenarios here that I'm actually going to use to create some of these things. And then we're going to go through a lot of questions based off this information that I just gave you. So what I'm going to do is I'm going to split my screen, which means part of this is going to go small, but we'll be able to see both the scenario as well as QuickBooks at the exact same time. Whoops, did not mean to do that. Give me 1 second. And so hopefully everything will line up here correctly. All right. Show my whole desktop. That way they're both on here. Okay. So I have just gone into the sales and getting paid. It's one of the options menus. You can certainly choose that menu if you would like. Sales and getting paid has a lot to do with money and workflow, right? So pretty much everything that I'm talking about here, you're going to find all of those here. There is another spot, though, that is extremely important to understand that it exists. It is one of the most forgotten things that is in QuickBooks. And of course, with my split screen here, you're not going to be able to see this menu to the side, but here we go. It's on that far left-hand side. Now, everything that I'm talking about today from a proactive standpoint, you can navigate to these widgets. However, just hit the plus create. If you hit the plus create, and again, like I said, everybody forgets about it because we all go to a menu, but if you hit plus create, you'll find all of these items that I was just talking about. And they're all right over here, right? So we've got our invoice and it's all going to be lined up under customers. We're going to talk about money out here in a minute. And so we're going to go everything here with these vendors. However, the very first thing that we do need to talk about today is actually our products and services. And in order to find our products and services, there's a couple ways to get there. We have to go to our sales and getting paid to do the products and services, or we can come up into the big gear. It is going to be under all of our lists, and we're going to choose products and services that way as well. I'm going to come over here, and we are going to create items. So this is where that discrepancy between is it a product and service, is it an item? QuickBooks uses both of those, right? And so before I go completely into this practice scenario, you're going to see me create a test item just so you can see that is it taxable, is it non-taxable? This is where you choose that type. So inventory is actually locked, which is great. And it's asking me, do I want to unlock that? It didn't used to be that way. And unfortunately, a lot of people ended up choosing it and it was a disaster. So this is the difference between service and product. Maybe I've got a product. So I'm going to do a non-inventory item. A SKU number, if I have an identifying number that I want to use, I'm going to do that. These categories, not to be confused with the other categories that we have in here. These are categories if I want to group products and services together. Generally, I skip over this category because you'll notice it says add new, there's nothing there. If I want to add a description, I'm just going to say this is my test product. I'm going to put in here my general price or rate that I charge. This might be a consistent thing for you. This might vary based on client, but I'm going to put in what's most common. Then I need to choose the appropriate income account. So these are going to be the income accounts that I have available as well as every other account. I just want to make sure that I am choosing income. So we had a question before, what income account do I choose? I'm setting that for my product and service. Since I said this is a non-inventory item, for me in particular, I'm going to choose sales and product income. And then my sales tax category. So I've already set up sales tax, so I'll see that there. I'm going to say this is a general taxable retail products. Use this if nothing else fits, right? I can view all sales tax items, but I'm going to say this is taxable standard rate. If it is not taxable, right, I'm not going to choose the taxable standard rate because I wouldn't want to put that in there. If I'm if I'm purchasing this from a vendor, so I'm buying it from someone else, and then reselling it, generally we are, unless we're making those products ourselves, I can put that same information in here. I can put whatever I'm purchasing it. This is going to help from reports in the future. I can say what my preferred vendor is, and then I can choose that expense account as well that I am choosing it from. So this might be direct supplies and materials. If I have that particular thing, I might say that I buy it for $50. You do not have to say that you're purchasing this from a vendor. It's not going to affect how you invoice. It's just an option that you can use. And I'm going to say save and close. And then you'll see your products and services line up now. Next time you come into this is exactly what it's going to look like, as opposed to that initial screen that we looked at. All right, now I'm going to try this split screen again and actually do this scenario. So what it's saying is I want to go to sales, customers, new customer, and I'm going to enter Bob. So I mentioned I will show you both ways to enter a customer. They actually have now separated sales from the customer hub. They used to be together and now they are separate. So I'm actually going to go down here into the customer hub and I'm going to add them here. And this is where I said we could import. These are those little videos that QuickBooks has for us. I'm going to add this customer manually. The only piece of information that's required of me here is to actually put the customer display name in. So if I'm just going to say this is my test customer, I could literally push save and go on. Now, I advise against this because I am a person that a company paid a year's salary just to go back and enter customer information and vendor information. I had to rebuild basically their entire QuickBooks system. Because the owner of the company had been there for 20 years, everything was stuck in his head. He never had any need to write down anybody's phone number, address, whatever it may be. Company was growing, and nobody had any idea where customer locations were. Imagine if that customer, if that business owner had passed, unfortunately, in the middle of a multi-million-dollar company, it would have been a disaster. This happens a lot because it is really easy to do. It's the only thing that QuickBooks requires. However, your future self will thank you. Don't pay someone else to do this, right? Or have your people pay to do this. So you want to enter the email and the phone number, right? We want emails in there because we can send them invoices that way. And phone numbers are super helpful. Anything else you can put in here is also super helpful. We can have communication preferences, right? So once we get into sending them information, whether we're texting them invoices and things like that, the system is going to require that you say that you have consent in order to do that. We don't want to be spammy, right? And if someone says no, absolutely not, you can't send me that information, the system will record it that we don't have permission to do that. We can put their billing address. We can also enter a shipping address. Now, shipping addresses are important, especially for moving products, because that's probably where the sales tax is going to be charged, right? Where they received it, not necessarily where it shipped from. So if it's not the same, we do want to change that. We can also add attachments. So when I mentioned if this is a tax exempt customer, we might want to put their tax exempt form, right, as an attachment here. So we would just click that. Any notes about the customer, we can do that as well. Any, primary payment method, that's fine. Terms are extremely important if we're invoicing someone, though. So is this particular customer, are they due on receipt, right? So the second they receive the invoice, are we extending them so that they have net 15, net 30, net 60? These are important because when we set up a invoice for this customer, it's going to default to whatever that is. And then whatever their language preference might be, delivery options. This is where we check the box. Is it tax exempt? We will say the reason for the exemption and any kind of details there. We also can set our sales tax rate. Generally, it's going to be automated based on location, no matter what. We haven't put any other sales tax in there. If there are multiple sales tax rates that we've added in there, we can switch that. So that's adding a customer. There's also many automated fields in which we can use. I'm going to not leave without saving. I'm going to go ahead and save because remember, I only had to have that one piece of information in there. And then now this is what this customer is going to look like. But I'm going to go over here to Bob's Fantastic Appliance Factory, and I'm going to add him in here really quick, and I'm going to show you how to do that directly from the estimate, which is what we're going to create. And I hate that I lose my little plus new when I'm shrunk up like this. There we go. So if I hit this plus new or plus create and I click estimate, I'm going to get the estimate screen now. And this is where, so does it populates? This is where I can add a customer on the fly. So right here at the top, we can take the tour, we can watch the video. I haven't made my estimate pretty in here, I'm sorry, so it's giving me all these pop-ups, but I can add a customer here, or I'm going to choose a customer that's already in here, but I'm going to say add new, and I'm going to add Bob. So we're going to say Bob's Fantastic. Maybe my computer will type to. Oh my gosh. Christy is failing at typing and looking at a screen. Billing, fantastic. And so we've got billing at bobsappliance.com. We can enter any kind of phone number in there. Billing address. I'm going to skip all of that just for timing, even though I just told you don't do that. Right? And so we're going to save that. I wanted to make sure we had that email address in there because you'll notice if you didn't have an email address in there, it would not populate here. It's automatically going to populate location of the sale is to be the office because I haven't put any kind of shipping info. But if I did put shipping info in there, it would have that there. Had I said, actually, you'll see it on the invoice side. My estimate date, I can change that. I can change my estimate numbers. This is part of that automation that once I've emailed it to Bob and he accepts it, you would see up there that it was accepted and the actual date that it was accepted. I can also add products and services. So I'm just going to add my test product here. And I'm going to say the quantity is 1. And then you'll see that this little green box is checked, right? Because I said this is a taxable product. And that's important. If it doesn't come up checked, then something's wrong. The test then in sales tax is you'll see that my selected sales tax rate is that automatic calculation, and my sales tax is saying it's $8. If you remember on that very first screen for sales tax, it said it was 8%. So I put in $100, it's $8. Things are working correctly. I've heard a lot of people say that the math is not correct. I can click to see the math. It will tell me where that location is. It will give me the breakdown of the product and service, right? And that's another way that I can actually go in and look. This is the payment options that are here, and it's asking me to activate my online card payments. I can edit it. I can add those types of things in there. As I mentioned before, there is a fee with some of these. There's some of these that don't have a fee. You are welcome to choose however you want those payments to work. I can then put a box in here how to get paid. I can add a note to the customer. I can also add a memo that's maybe for myself or my team. I can add any kind of estimate. So if there's some kind of backup information where I talk to the customer that helped me create this, right, I can keep all that information together. And then I can say review and send. And so there's going to be a default email that's going to come up. And in that default email, I'm going to see my options. Now, to change this, I would go up into that big gear and I would go to accounts and settings. And this is where I can change a lot of my default emails. I could also change directly from here as well. So if I wanted to say something a little bit better than what this is, then I can do that. This is what the client will see over here on the right-hand side. And as I mentioned before, that's where they review and approve it, right? So if they click that button, it automatically moves it through the system to the next step. I can say send estimate. Obviously for Bob, I'm not going to send the estimate because I have no idea if that's a real place or not. And I definitely don't want to be sending Bob an estimate when he's not really my customer and has no idea where it's coming from. But once that estimate has been saved and created, I can then see it in my sales. So I'm going to go into my overview here. Move it over here. Maybe using my customer hub. Sorry. They've split that off too. So the estimates are now under customer hub. I can see it here. And as I mentioned before, there is a workflow system that happens and it's over here to the right. And so right here, it's telling me that the next step in the process is actually to send it because I didn't actually send it. I saved it. If I want to convert it to an invoice, this is also where I can mark it as accepted. If I had sent it to Bob, Bob did that whole link electronically and he accepted it, I would see that the next step in this process is actually to convert it to an invoice because the system is saying, all right, you're done. You know, the estimate is accepted, go perform it. It sits there. And then this is the point where I convert it to an invoice. Now, remember before I said an invoice looks exactly like an estimate. So we've got this exact same thing. We just can see the difference up here at the top. As long as, and this can be customized, that was part of adding the logo, right? In class one, you can change these colors. You can change some of the layout. There is a little bit of creativity that can be involved here. You'll notice this is linked to a transaction that's linking it back to the estimate. If I were to click that, it would just take me back to the estimate. Maybe Bob made a decision partway through it and I had to add some labor here or something. I'm going to add, $50 an hour to my rate because Bob needed that. Remember, I don't have to actually have the estimate updated in order to change this invoice. There are some companies that's a required thing. It depends on your company. I didn't set up the taxable side of services yet, so that's why that screen box is not checked. And maybe my service is not taxable, depending on what I do. I look down through the invoice, everything is good. I did this exact same thing where I review and send. It's going to give me that email. The difference being that it wants me to set up my business in order to be able to send that information. So it wants to make sure that I'm legitimate. So you will have to go through that process in order to set that up. If I was in the test company, this would look a little bit different. However, this is the screen that I was trying to get to. And over on the right-hand side, this is what it would look like that Bob is going to receive. And so you can, Bob can click to view the details. And also once I've got the payments set up, if I choose to do that, then I can, instead of view details here, it will actually say pay invoice. So it would say the amount, they could click that directly and they could pay that invoice. Obviously I'm not going to send this invoice, because it's not going to go anywhere if I do. But I can then go find this invoice over here. The other trick to finding things that I'm working on is I can come up here to invoice, and I want to show you this little trick. There is this little clock guy up here to the left, and if you click him, you can see all of your recent transactions. And so that's one of those tricks to finding those things. So right now I want to receive this payment on this invoice. So I can either go directly to this invoice to receive the payment. I can see the received payment at the top, or I can do that plus create and receive that payment there. It's going to take me to the receive payment link, and it's going to ask me who my customer is. If I did it directly from the invoice, it would already populate Bob, and it would already tell me what invoices Bob has open. So this is the invoice that I want to pay right now. I'm going to record this payment, so I'm either going to charge it to the credit card processor that is QuickBooks, not the credit card processor that you might be using. So make sure that you have that differentiated correctly. The payment method, I can add new payment methods. So the one that said they received the payment through Zelle, you can actually use Zelle, or they were paying someone through Zelle. You can add that. You can add Venmo, PayPal, so you can keep track from a reporting standpoint. This is where I mentioned you can switch from undeposited funds to whatever bank account. I don't actually have a bank account connected here. If you remember, I have a credit card, so I really don't have that option right now. But if I had a checking account, if I had a savings account, those would actually show up here, and then I would choose that correct account and that amount that I'm receiving. So for right now, it's going to go into undeposited funds. I'm going to record and close. And then I can do that bank deposit that I mentioned. So create and then bank deposit. I come over here to bank deposit. And I see now that I have this. So I'm going to choose this account that I'm depositing this into, which unfortunately, as I mentioned before, I don't have a bank account here. But if I did have the bank account, that would be an option. I could choose this. I wouldn't do this one by one, right? I would do this if I had multiple items that I had deposited, so that I can get that total. This is also if I receive other funds as part of this deposit that maybe didn't have an invoice associated with it. So it's a walk-in customer or it's additional items. I work with a client in particular. They sell products from their salon, or they have different services that maybe they didn't run them through their POS system for one reason or another. This gives you the option to add those funds so that that deposit amount is then correct. And I can change this from save and new to save and close. Oh, I have to select an account, which I don't have one, right? So I'm not going to go ahead and go through this bank deposit, but that's how that works. I also mentioned there is a sales receipt, right? And so I'm not doing an estimate. I'm not doing an invoice. If I click sales receipt, you will notice that it's highlighting at the top that I need to choose how to process my payments. But I will have this exact same information that was from the invoice down here. So I'm going to add my products and services there. I can choose my customer up here, so we can do Bob again. Bob's information is going to populate. He's paying me. I can choose the method that he's paying me right here. I can add his check number here. That's a good thing to put in the reference number. I can do those undeposited funds. I can add my test product that was $100. I see that I've got the $108 here. I can also add that service that I had added before. I had created a rate here. You can see the automation when having those products and services in there is nice. I don't have a description here. I probably want to add that. Even if you change the rate, as I mentioned in those products and services, when it comes to the invoice or the description, if I want to add more to it, you can do that. It's just helpful to get that canned language that you might be using all the time on something so that you don't have to type it over and over and over. You don't have to copy and paste. So this is going to be deposited to undeposited funds, and I can excuse me, you can record and close then. And then now I can see that this invoice is here and it's marked as paid. So I don't have a balance. If there is a balance there or if something is overdue, I'm going to see that. I'm also going to see it up here in these little things. It's going to tell me if something is overdue or it's not due yet. So that is the money in workflow from a proactive standpoint, in a nutshell. All right, we're going to talk some questions then. So That was the sales receipt. All right. So this is where you guys get to enter in the chat, not in the Q&A, because I see lots of questions happening in Q&A. And I'll look through the Q&A while you're answering. But the first question is, why is it important to set up products and services before creating invoices? A, it speeds up bank reconciliation. B, it ensures the income is categorized correctly on your reports. C, it's required to send emails. Or D, it prevents customers from being created. What do you guys think there? Um, Using the chat. Yes, absolutely. Right off the bat, good job. It is B. So if you remember when we set up the products and services, we had to choose the income account. So if you start to look at your reports and you say, why is this stuff in this income account? It's probably a product and service that wasn't set up correctly and is defaulting to the wrong income account. So that's one of those places to go back and look. Next question. What is the main purpose of creating an estimate? A, to record the payment received. B, to track expenses. C, to provide a quote before the work begins. Or D, to file sales tax. Correct. The answer to that one is C. Next, what is the best practice when creating an invoice after a client approves an estimate? Create a brand new invoice from scratch. Copy and paste the estimate manually is B. C, convert the estimate into an invoice. Or D, use a sales receipt instead. And yes, to all of you answering C, you are absolutely correct. That saves you a lot of time, right? By just converting it straight to an invoice, especially if you have a lot of things on there. When should you use an invoice? A, when payment is received immediately. B, when you expect to be paid at a later date. C, when entering expenses. Or D, when reconciling the bank. Yes, you are correct. That is B. And bonus points. What account is affected when you create an invoice that's actually in your chart of accounts? What happens to that value of what that invoice is? What is that called while that clock is ticking? Maybe I didn't ask that quite the right way. Starts with the word account. Yes, Becky, nice job. Accounts receivable. So even though you are saying that there is invoice or an income account associated with that, right? Thanks, Martha. Uh, the clock is ticking, right? So it doesn't actually, it isn't actually going to be recorded as income yet until we actually receive that money. So accounts receivable is kind of that holding account where that is sitting until we actually receive that payment. When should you use a sales receipt? When you send a bill to the vendor. B, when the payment is received at the time of the sale. C, when creating an estimate. Or D, when tracking unpaid invoices. Yes, the answer to that one is B. Look at all of you. Such rock stars. So yes, this is the simultaneous, I'm recording the payment at the same time I'm invoicing them, and that is called a sales receipt. What is the purpose of the receive payment step? A, to create the income, to record that the invoice has been paid, C, to send an estimate, or to calculate sales tax. And it is B, to record that the invoice has been paid. This is kind of a trick question too, because it's kind of also A, right? This is where it's creating it as actual income. This is where it's removing it then from accounts receivable and giving us credit for that income that's happening over on our profit and loss statement. But technically the answer to this one is B. I do get some that answer A to that one. Why should you use undeposited funds? To increase the income. B, to delay recording payments. C, to group payments so they match bank deposits. And D, to avoid creating invoices. We don't want to avoid creating invoices. This is how we get our income. And so the answer to this one is C. This is where we are grouping things together so that it matches our actual bank deposit value. You will thank yourself for using this if this is a process that you do in your business, because otherwise your reconciliation won't tie out correctly, and really trying to figure out what checks went into what deposit or what is a nightmare to anyone that's tried to do that before. What is the purpose of creating a bank deposit in QuickBooks? It's to create an income, to match QuickBooks records to actual bank deposits, to send invoices, or D, to track expenses. And it is B, yep, to match the QuickBooks records to the actual bank deposits. What happens if you create both an invoice and a sales receipt for the same transaction? A, nothing happens. B, the system deletes one automatically. C, the income is recorded twice, or D, the payment disappears. Fun, fun. This is actually a duplicate of the recording of the income, and we do not want to do that, right? Same thing, we can triple our income if we accidentally also then don't match a income, an invoice or a sales receipt to a bank transaction where we receive the deposit for that actual payment also. So we can create kind of a mess there, and we want to make sure that we're not doing that either. If sales are coming from a POS system like Square or Shopify, what should you not do? A, review transactions. B, match deposits. C, manually recreate sales in QuickBooks. Or D, check income categories. Yep, you guys are answering C. So I have seen some people capture those in that bank feed as well as create a whole invoice, then receive a payment. That is a lot of steps that you don't want to do that are not necessary with those POS systems. You might find a YouTube video out there that actually recommends that you create a sales receipt in order to record this, and it is one of those processes that you can use. Just make sure whatever your process for either integrating the POS system, using the journal entry, using the sales receipt might be that you just use one process and you stick with it. You don't actually duplicate, triplicate, whatever it may be. What happens when a customer is marked as tax exempt? A, they cannot be invoiced. B, sales tax will not be applied to their transactions. C, income is not recorded. Or D, payments cannot be received. Yes, B, sales tax will not be applied no matter how you have the system set up when you check that. All right, great job. You guys picked up on all of that fun stuff from the money in. So now we are going to talk money out workflow. Some of you may not ever use those money in workflows that I talked about, at least from an estimating invoicing standpoint. You all, please at some point, use the money out workflow. It is very important because cash flow. Cannot stress cash flow enough. This is a next level. I've started to do my bookkeeping. I start to understand cash, bank transactions as they're happening. I'm understanding my categories. Maybe I've started to look at my reports, and I'm starting to manage my business from that standpoint. Then we step into the world of, now, how do I understand cash flow and what does that really mean? Well, in order to understand what cash flow is, we have to be able to see what's coming forward, ahead. So everything that's happening in our bank account already happened, right? It's behind us. Everything that we see in our profit and loss and our balance sheet, it's already done. We can't go back and we can't undo that, or we can't change that. Cash flow, however, is looking forward. And so in order to get those clocks ticking, we have to know what bills are coming forward. And this can be kind of tedious. People will say, I don't want to enter all my bills in the system. I don't have time. Do you have time to make the adequate decisions for your business? The only way that you can really do that is to really know what's coming forward. Now, whether or not you're putting those in QuickBooks, you probably should if you're using a system, right? You need everything in the same place. Or if you're putting those on a spreadsheet, or you have a pile on your desk, whatever it may be. Sometimes I've seen that this is week 1, week 2, week 3, week 4. Get a system so that you can start getting to the point where you can make cash flow decisions built into your business. So you have someone else enter this for you, right? If you really don't want to. And really, the money out workflow, the only thing that's listed here is paying bills. However, we talked about a couple other parts of money out workflow, and those are those entering those expenses when they're happening, as opposed to waiting for them to come in from the bank transactions. So that is entering those receipts at the time of purchase, right? There is a spot where we can go in and enter an expense as well. That's the older school way of using QuickBooks, because bank transactions or that bank feed didn't used to exist. So we would have to enter all of those one by one. I'll still show you how to do it. This is also where we talk about vendors, and are they subcontractors, and how do we actually say that they're subcontractors, and how do we get our 1099s to start to line up, and how do we pay those, right? So that's all part of this money out workflow, and we're going to go through that real quick. So vendor setup. So vendor setup is very much like contractor setup. There's a spot in the system. I can add vendors. I can mark a checkbox the same way that I checked if someone was sales tax exempt. I'll show you where that is. You have to scroll down to it. You can put in the contractor information if they are 1099. So I can put in their social security number, or I can put in their EIN number. I can also upload a copy of that W-9 that they might have filled out, or should have filled out, right? Those are documents that we should have on everybody that's a 1099. There are some vendors, right, that we purchase things from that we're going to have to give a 1099. They're not necessarily just contractors that are doing subcontract work for us. So we do need to be able to keep track of those in the system, and we want to make sure that we're adequately recording that. Once we have them set up in the system as a vendor or a contractor, then we can choose them. We can also add these on the fly with an expense the exact same way, or as a bill, the exact same way we did this on the invoice. So it'll have that add new up at the top. This is a great feature. This is also a bad feature. So if you have someone that maybe was using a different name for some reason, or they didn't want to scroll through everybody that might be there, or maybe they just didn't know what name to use, they can go ahead and add it again, and then you'll have duplications. So this is where those control measures within your company, I often would have even though you have the ability to add new, do not add new. There is a process for adding a new vendor or adding a new customer. If you have one within, those are the systems and processes within your business. Otherwise, you can get a lot of the exact same name business, or somebody called it one thing or somebody called it another. So be aware of that it can happen. It's so easy to do. All vendors, this is my little phrase and it might be in there. All vendors are contractors, not all contractors are vendors. Does that make sense? So the difference is one gets a 1099, one does not, right? And it is literally the checking of a box. So this is how you do the vendor setup. I'm going to show you this step by step, so I'm not going to go through this slide. Then we're going to enter a bill. There's a couple ways you can enter a bill. You can actually email it to yourself through QuickBooks. You will have a unique email address in your QuickBooks. I'll show you where you can see that. It's when we go to enter a bill. Then we're going to go talk about how to pay that bill, because we need to make sure, just like with invoices, when we receive a payment, we have to put it back against that invoice. Same thing with we enter a bill. It starts the clock on something called accounts payable. It's a liability. That liability account sits there until we pay that bill. So we need to make sure that we pay the bill against that. Then we have direct expenses. So we didn't enter a bill. We just need to make sure that that goes in there. These are the situations at the bottom, how we do this workflow. You receive a bill that you pay at a later date. You will want to enter it as a bill and then pay it as a bill. You pay it immediately. You can just enter it as an expense. It's a credit card purchase. You can also enter that as an expense, or you can import, categorize, do the whole bank feed thing. But bills mostly is what we're talking about. Best practices, don't mix workflows. Very similar to invoices, right? We don't want to create an invoice, a sales receipt, then capture it in the bank transactions. Same thing here. Don't enter a bill and then also enter an expense, because then you duplicated the expense, or then go capture it in the bank transactions. Use the bills for visibility. This is the cash flow matters, right? This is why we track them. This is why we have them in there. We know what's coming forward. We can just check boxes and pay those bills. We can manage our money better. Setting up our contractors correctly, we want to make sure we turn on our 1099 tracking at the start. This saves a lot of cleanup later. And then we also want to make sure we're using the correct expense category, because that affects our profit and loss reports, our tax deductions, our financial clarity. Match things in the bank feed back to the bills that we have paid, instead of adding duplicates. So we're going to skip this a little bit, and I'm just going to do it really quick because of time. But if we were coming in to add a vendor, right, or add a contractor, we would want to make sure, and of course they didn't separate this one out for some reason, but we are now in everything to have to do with expenses and bills. And we can see down through here, we can see contractors, we can see vendors, we can see our expense transactions, our bills payments, it's all in here. 1099s also. If we come into a vendor and we've just added them as a vendor, but we didn't know they were a contractor at the time, we learned they're a contractor later, that's fine. The system is actually going to move them directly from vendors and add them into contractors. If I go down here to contractors, I don't think I've set up anybody in our little thing we were playing around. I could come down here directly and set them up here as well, but it doesn't have to be. I can come into vendors. If I want to make Amazon just for time's sake, even though I know Amazon is not a 1099 contractor, or a person of that matter, I can click into Amazon. I'm just going to show you where this is so that you can find the box. I'm going to edit Amazon up here at the top. This is the screen that you're going to get. You'll see this as soon as I go in to add a bill and add a new person this way. Again, you want to fill in that same information that I preached about, adding attachments as well. If I have bill pay information in particular, I can add that in here. Sales tax, right? So this is where I track the payments for 1099. So this is just one little box. This is also where I put their business ID number. So their sales tax or their EIN number is here. I can put their payment terms in. I can choose their default expense account for that particular person because it will automatically come up, which is super nice. I do have one, I believe, for contractors. Yeah, direct contractor expense. So I can definitely add that, even though it's Amazon. I can also add my W-9 up here as that attachment so I can make sure that they're properly getting recorded. Once I've saved this, and then I come back over here, I can see that my contractors, Amazon is here, and it's telling me I don't have my W-9 in here. It's mad at me already. And then I need to finish setup and pay them. So I obviously have to have key information in here in order to generate a proper 1099. So I have to have their address. I have to have their EIN or their tax ID number. And so the system is telling me that it's not there, and it's not correct. You can set up and pay 1099s directly out of here. You can prepare them. You can add those different contractors. So that's how you do that. How do we add a bill? If I just click bill, I can also come up here to the plus create, and I'm going to have that option over here as well. There's no bills here, it's saying. If I want to add a bill, now you can see it already populated up here. In your own QuickBooks, you'll see this up here as well. So if I wanted to create things for me, like bills, the same thing as receipts, right? This is that email address that's going to be specific to my QuickBooks system. So if I receive bills, invoices from vendors, right? They're called bills in my email, or I want to take a picture of them with my phone, whatever it may be, I can email it to that email address. It will use AI. It will pull that information off of it. So it's not like you have to type them in one by one, and they will then come in here and they will be as unpaid. Action over to the right, I can mark them as paid. So maybe I'm going directly to my bank account and I'm paying them. I'm not using the whole QuickBooks payments here because there is a fee for that. There's like a few that they include every month, but then after you pay so much, then you have to pay per transaction. I don't personally use that. I use my own bank account. But I don't pay a lot of invoice or pay a lot of bills either. If I was paying a lot of bills out of the system, it's really easy to check the box. The system pays it. Again, it's like that time thing, right? And manual entering. I can set up reoccurring bills. So if I have you probably saw my Starlink pop up. I have a Starlink bill that I get charged every single month, except for just last month they upped it. I could set that up as a reoccurring bill, so it's always going to be in here, and I only have to do that one time, and it will show up on the 1st of every month or the 15th of every month, whatever. I put that in there. If I just want to add a bill and add that vendor on the fly, as I mentioned, I can hit that. I can hit create. I'm going to get this choose a vendor up here at the top. This is where I click that add new, right? And I can add that vendor on the fly. Same thing as I added that customer. If I'm going to add Amazon, I can do that. I can say what the terms are, which I didn't actually say that for Amazon. So this is if I have 30 days to pay them, 15 days to pay them. Make sure that I put the correct due date in there. The correct due date is really important because, as I mentioned from those cash flow reports, that's going to tell me when this bill is actually due. I had already set up Amazon to be my direct subcontractor category, so that's already in there. I just need to put the amount of what that bill is in there. And then when I say save and schedule payment, the system is defaulting. That means that you've set up those QuickBooks payments. That's not scheduling the payment for yourself, right? So I might want to skip past that and say save and close. And once I've saved and closed, Actually, I made that a $0 bill. It still should pop up in here because I created it. Nope, because it's $0, so it's not even going to pop up in there. But I need to go back and add that because we need to see how we pay a bill. We'll say that's next week. And we're going to save and close. All right. And then you'll see this line up in here. I can either navigate into expenses and bills and go to the bill, or as before, I can go to plus create and I can just say pay bills. And this is asking me, do I want to subscribe to this? Do I want to do it this way? I can find out more about bill pay. That's that direction that you can get there. Otherwise, I'm going to go back to my bill. I just want to make sure that you were aware of that, that's how you would do that. As soon as this bill populates over to the right-hand side, I'm just going to do the drop down and I can mark this as paid. So if I am using the bank transactions where this payment is coming in here, or I am paying it right now, I'm going to mark this as paid then. And I'm going to enter that payment. So this is where the bill payment comes into play then. And I'm going to choose the bank or the credit card account in which I'm paying that from. And this is how this is going to close out this bill then, by saying that I have paid it and I've paid it directly from that credit card then. And then now the bill is paid. And I might have done something wrong. Let that populate back again. I think the amount. I didn't put the amount in there. Oh, now it's saying I don't have any bills. Okay. But I do believe it gave me a warning to tell me that I had to enter that amount. So that is bills in a nutshell. I did mention adding an expense that isn't a bill. Plus create is where you would come from that. You would click expense. And then it would populate. You would put that payee up there. My payment account is automatically going to populate. Office expenses is coming up in there. I can change that to whatever it is. This is the amount of the expense. It's populating from what I had previously put in there. That's always scary. It's going to ask you that question. Do you want to use a previous item? And you probably are going to say no to that because you want to create a new expense, not a previous expense, and have that come into there. So that is the workflow of how money out works. Also super, super quick. So let's do just a couple practice questions, and then I'm going to switch over to the questions that you guys are asking. There are going to be a few slides at the end of this that talk about the month-end close, and you guys can review those. Those are very important to note that in the system you can change the close date for your books, and it allows you to stop. It gives you a warning in case you are actually trying to change a transaction that might have happened last year or in a prior month. So changing that date. Often businesses will only use that once a year. They'll do it at the very end of the year so that they don't accidentally type in a prior year's date because it is pretty easy to do. And it's just a warning. You can still make those changes even though we shouldn't be. Practice questions. You receive a bill from the vendor for $500. You enter the bill in QuickBooks. Later, you also enter the expense for $500 when the payment clears. What happens? Nothing. QuickBooks automatically fixes it. The expense is recorded twice. Overstating expense, the bill is automatically deleted, or it only affects accounts payable. So the answer to that one is B. Good job. It does duplicate it, so we don't want to do that. Craig receives an invoice from a supplier that is due in 15 days. What should he use? A, a sales receipt, B, an expense, C, a bill, or D, a journal entry? Yep, Becky already coming in with the C. Good job. We do want to enter that as a bill. Craig purchases fuel and pays it immediately with his debit card. What should he use? A bill, B, an expense, C, an invoice, or D, pay bills? This is B. Good job. This is where we do that plus create and just enter that bill. Or we can enter that on the app by taking a picture of that receipt and having AI help us as well. Craig hires a subcontractor for landscaping work. What is the most important step during setup? A, add a billing address only. B, assign a product or service. Or C, check tracked payments for 1099. Or D, set the payment terms. Obviously, you want to make sure that you are doing the majority of these, but definitely C is the most important because he is a subcontractor and we want to make sure that we're tracking those payments. Why would a business use bills instead of expenses? A, to increase income. B, to track what we owe and manage cash flow. C, to avoid entering vending information, or D, to skip the bank reconciliation. This one is B. Good job. It's to track what we owe and to help manage our cash flow. You can certainly pull cash flow reports, but if you haven't used bills or you're not using invoices or you're actually entering information in there, you're not going to see anything from a cash flow standpoint because the system's not going to know what's coming forward. You see a transaction in the bank feed that matches a bill payment you already entered. What should you do? A, add as a new expense. B, ignore it. C, match it to the existing transaction. Or D, delete the bill. This one is C. We're going to use match because we know it's already in the system. So this is what I said. When you guys start to develop your processes and you know that you're consistently doing things, you'll know if it's supposed to be a match or not without the system even telling you. And so if you see it come through in the bank transactions and it's not matching, a couple things could have happened. The value is different, right? So if we're even different by 1 penny, then it's not going to be able to match back. We might have said it was a different bank account when we entered that expense. It won't match either. So there might have been something with the entry that we made. If a contractor is not marked for 1099 tracking, what is the likely result? It looks like all of you were already answering C, which is absolutely correct. Good job. So we're going to skip past those. As I mentioned, these slides are here for you guys to go back and look at, talking about month-end close, and it goes through all of that as well, step by step, how to do that month-end close. But my recommendation for that is to get yourself on some kind of schedule from a financial calendar type standpoint. So if you're looking at your QuickBooks every Friday, put it on your calendar, stick with it, right? So this is categorizing. If every month you know that you'll have all your bank statements in by the 17th of the month, then put it on your schedule that you're reconciling that day because you know you would have received all of your bank statements by that day. And once you get into the process of doing this every single month and keeping track of it, the easier that it will be. I promise you it will get easier the more that you practice. Inevitably, the reconciliation part of it is where people are like, I only do this once a month. Like, and everything else that I do in business, I completely forget how I was supposed to reconcile from month to month. Remember, there are those little QuickBooks videos, just in case, as well as you can YouTube, you can Google, and you can figure out how to do those processes again. You also have all these slides that you can go back and reference, as well as these videos that you can go back and look. So I'm going to run through and do my lightning round of questions. It looks like we've got 10 right now. If you guys have any other questions, go ahead and add them in there. Thankfully, I do have a few minutes after this, so I'm going to run over. Again, this is me, President, SBC Consulting. Feel free to link with me on LinkedIn. I know quite a few of you have. I've already said hello. You've said hello to me. And that's our website as well. So thank you all for joining. I do appreciate it. If you have any specific questions about how to do something in QuickBooks, though, I do want to say, please go to your New York SBDC. Do not come to me because unfortunately, I'm not able to help you. You would need to go through them first, right? So I do want to say that, although I do love connecting with businesses on LinkedIn. So feel free to do that. All right, so in restaurant business, is it possible we can link QuickBooks to POS? Where should I add and categorize? Yes, it is possible to link your POS system. I mentioned before, you might want to make a decision. How will you actually manage that POS system? There is an integration feature in QuickBooks that you can integrate a certain app. The setup here is extremely important, how you get that set up. You can also use a journal entry to cross-reference presents those reports, as well as sometimes there's that sales receipt function. So it really depends on the type of POS system that you're using, and you'll want to research the best way to go about that for you. Don't be surprised if you choose one way and you say, oh no, I don't like that, and you switch another way as well. So there are multiple options out there. I have a checking account with a federal credit union. How can I record those transactions in QuickBooks? So if the credit union will link to QuickBooks from a bank transaction standpoint, many credit unions do, then you would do the exact same process with the bank transactions. You would connect the account. If it does not, I believe it was class one. Yeah, class one slides, maybe class two slides. There is an entire step-by-step process of how you would download and import then those transactions to get them into QuickBooks. So reference those slides if that's not available. What if we use subcontractors and want to create a work order? Is there something available? There is not an actual work order per se that you can create in here, unfortunately, unless they've added it recently, but I've had that question before. Are grant monies for arts grants considered a product or a service? It really doesn't fit either. So grants, you're actually going to have, so that comes into, this might be the for-profit that there's a lot of terminology that you're using that's actually nonprofit. You're going to want to have something listed in there as grant. Now you're going to put under product or service and you're just going to be consistent with it, right? So when you're entering those products or services, you're going to say whether it's a service or whether it's non-inventory. You will know how to defend that when someone asks what it is, but the income for that might actually be grant money. I don't know. That's definitely your accountant question. How do you handle many anonymous customers, non-repeat customers? Yes. So we don't necessarily want to put in every single well, not necessarily. Customers we probably want to enter. Vendors we don't necessarily want to enter. Customers also, if we have just customers that are coming into a retail establishment, we're just doing a sales receipt. There's a generic customer that you can set up that says in person or miscellaneous or counter is another one. The same thing happens with vendor. Someone will set up miscellaneous. Just know that when you want to pull detailed reports about things, you will not actually be able to see any kind of detail on those types of customers. They'll just all be lumped into whatever that miscellaneous is. But definitely from a vendor standpoint, I have seen that a lot, is that you'll just put like a miscellaneous or a general type thing to lump those in there. Other than in the email body to change what's said, where do you change all further emails? So you can actually change them directly in that email itself when you're typing it, and it will save. Otherwise, go into the big gear, top right-hand corner, accounts and settings, and there's a sales tab in there on the left-hand side, and that's where you can change default emails as well. Oh, you're welcome. Glad that we were here. Glad that Jenny was having this class for the New York SBDC, and glad that I could be here. For a large cleanup project, ooh, yes. Would you generally recommend working through the existing file or starting fresh? And are there free resources to support available through the SBDCs that can help with this process? Certainly, Jenny can answer the question about the resources available at the SBDC. And I would say that would be a determination based on how much of a disaster the file is. Whether we would just recommend that you would start new, or if there is something that can actually be cleaned up. Sometimes they are so bad that we'll say, to save yourself a lot of time and effort, and free resources run out eventually, and money is not always available, that you might want to start over. But that is a decision that can be made there. Jenny, I'll let you answer your part of it there if you wanted.
I'll just really quickly add, I put the link for our website in the chat, and we would invite you to go there and click the book appointment button if you've not seen an SBDC advisor before. We have many advisors who know QuickBooks well and can discuss those issues with you as you are going through and looking at how you are cleaning up your account. So I invite you. We have 20 centers around the state, and wherever you're at in the state, there will be somebody who can help you.
Do I set up my landlord for my retail space as a vendor? What about a separate landlord that I rent space for my inventory? Are they vendors? So, if it's somebody that you rent space from, that's one thing. If it's someone that rents space from you, that's another thing, right? So, if they're renting from you, they're technically a customer. If you're renting from them, they're technically a vendor. So, hopefully that helps answer that. It sounds like both of those might be expenses in your world. So, you're renting maybe like a storage unit type space for your inventory, and you're also renting a retail space. Those are both vendors. Those are both expenses in your world that you would be setting up. If I have a contractor who has to be paid via a wire transfer, is that okay? If you're okay with that, right? You can certainly set that up and pay them via wire transfer. Same thing as if you wrote them a check or you went to your bank or you used QuickBooks set up. There's a multitude of ways you can pay someone. There's Zelle, and I always say stay away from Cash App. I almost said it, but oh my gosh, so many people say I pay people with Cash App and they pay me. And really, if you've tried to connect that and sift through it, it can sometimes be a nightmare. Although it is a regularly utilized item, you do have to manage it, I guess is the point. The same thing that you have to manage a bank account. I don't understand when a 1099 is appropriate. I have a contractor doing some renovations in my space. Do I have to track 1099? Generally, I would say yes in that situation. So, if they happen to be a corporation, you would not give them a 1099. So, we're talking more sole proprietor partnership LLC. Also, it depends on the type of function that they are providing for you. So, take someone like me for an example. I'm a consultant. It's considered a professional service. We receive 1099s. So, anybody that kind of falls into that space. If it's someone that, like Amazon, that you're buying products from, you're not going to give them a 1099, even though they're a corporation. But you're not going to give them a 1099. If you have the contractor doing space, that is generally someone who regularly receives 1099. From your perspective, even if you accidentally give someone a 1099 that you shouldn't have, the worst thing that's going to happen is you might receive a letter from the IRS that just says it's not necessary. Almost never that even happens. They know on their end, as well as even if a corporation receives a 1099, they take care of it from their tax standpoint. So, really, I guess what I'm saying is you can't really make an error here. The other person is what sorts it out. The most important thing is if you try to do your part and do it correctly, and you might just receive a call from them that says, "Hey, we don't get 1099s," and then you just uncheck the box, right? QBO was established and records were transferred, but QBO was never used. Can I transfer data from the last date? You sure can. Yeah. You might want to re-migrate if that's what you're talking about from a transferred standpoint. Also, you can exclude all the transactions that are already in there in the bank feed. If that's what you mean by you've connected the account and you don't want to use any of those transactions, that's where that exclude button is a great thing. And then you can reconnect the account and start it from the date that you want it. You are welcome, Kathleen. And good, Martha. Great. I think I got everybody.
We got everything in the Q&A. There was one question back in the chat. So this is our consultant, services only. They
Okay,
don't charge taxes to their clients,
great.
but try to proactively include what they're thinking of as income tax in the quote fee,
Yes,
and put that aside for the end of the year tax payment, at which point this person has a question about LLC filing versus S Corp and in order to lower their tax liabilities. So is that an accountant question then, Christy?
definitely an accountant question. Yeah, there's a lot in there. And absolutely, setting money aside to pay your federal income taxes at the end of the year is a wonderful idea. That way that, nothing's creeping up on you, right? That's a cash flow thing as well, that you're planning ahead for that. But certainly differences between filings and how much you should keep back and stuff like that. Absolutely ask your accountant that question.
We did have one more pop up about 1099s. Do landlords need 1099s?
Typically, no.
Okay.
Typically not. Yeah, not with a landlord.
All right. I hope we've gotten everything. There's several thank yous, so I want to make sure that you're aware of that. To our attendees, thank you so much. You've been a fantastic audience. We've loved the engagement and the excellent questions. So we appreciate having you here. Please remember that there will be a survey after that will show up just as I shut down the webinar. We'd love to get your feedback on today's session, other things that we can help you with through education at the NYSBDC. And I think that wraps up everything. It's hard to believe that
All of it.
we're actually done. So look for that follow-up email with the link that is our home base for this webinar series on our website. You can access all the recordings. Resources will be there through early August, so make sure to get those if you want them. Uh, Sooner is better than later. All right. Thank you again, Christy and everyone, and have a fantastic rest of your day. Bye-bye all.
Thank you. Bye bye.